Hello and welcome to Hot Money on Bloomberg Quint Live, India's first digital live streaming business news service. This is a show which gets you a complete wrap of all the stocks that are buzzing in trade. I am Darshan Mehta. Let's welcome our experts then. Ritesh Ashar of KIFS TRADECAPITal and TS Harrier of HRBV Client Solution join us on the show now. Many thanks to both of my guests for joining me. Today on Hot Money, we'll discuss with our guests and ask them if there is value left in GMR Infra after the airport deal. We talk the way ahead for IRCTC, one of the best performing PSU stocks of late. We asked them for one mid-cap recommendation since the mid-cap market is looking slightly bullish at this point of time. And post the deal with Axis Bank, what's the view on Max Financial? Is the deal that something that they like, or valuation is something that they prefer on Max Financial? So that's the view. And those are the stocks that we'll be talking about on Hot Money today. Let's start with the first one, and that is GMR Infra. They've sold their stake to Airports de Paris, 49% stake in the airport vertical. It's been going on for a long time, but finally, after years and years, it's finally happened. Is GMR Infra worth an investment at this point of time, or would you avoid? Hari, what's your sense on GMR Infra? It's been moving now of late. Over the past few years, investors have totally lost interest in GMR Infra. But now, with this airport deal coming in, does it put value on shareholder on the share of GMR Infra?
No, I'm not too sure, Darshan, because I think the good thing is that they have a huge overhang of debt. I think about 7,500 crores the total debt of GMR. So I think to the extent of this ADP France deal, I think the debt should come down to that extent. So that will be positive. But the bigger question is, if you look at the business model of GMR, they are largely into, I think, infra, roads plus airports. Now, I think airports have already selling one out. They sold some to Adani, they're selling some to ADP. So I think they are gradually getting out of the airports business, and that is largely because that is the only business that can easily be monetized. So I think that is one business they've been gradually selling out of. So once the airport deal happens, and I think they are now left with just 51% of the airport business. So I don't know how much longer they'll be able to sustain. And my understanding is eventually they'll have to sell out that stake and probably repay the whole debt, and then just stick to the infra and roads. So once that happens, I'm not sure how attractive GMR would be. So I think I would be a little cautious. I don't think that the airport deal really makes the stock attractive. I think it's probably the beginning of the winding down of the entire airport business of the company.
So someone who wants to play for the airport business, because that is the one that is probably creating value for them, should they hold on to the shares if someone has shares to play it in case it's demerged at a later stage?
See, I would rather say if you want to look at an airport stock, I think Adani is gradually becoming a much better airport stock because they have Ahmedabad, they have Mangalore, they have Lucknow, and they're planning to add 6 more airports. They're planning to bid for Air India. So I think if you're looking at, I would say, an airport stock, if you're looking at an aviation ecosystem stock, I would believe that Adani makes a better bid than GMR.
Okay, what's your sense on this, Ritesh? The deal that happened, what did you make of the deal, and what's the view for shareholders of GMR?
Since up to some extent, even I'm also agree with what we'll see overall GMR Infra. It is quite range bound and choppy in terms of price. And if you look at it, around 15 at the downside and 26 at the upside, in terms of investors, they have not make ample amount of money in spite of the airport deal has done. If you look at overall portfolio of the company, almost 69% the portfolio of in terms of revenue is coming from the airport business, 8% from energy, rest is from highway, and 15% is from the other business. So if you look at overall debt structure is increasing day by day in a quarter-on-quarter basis, which is something quite cause of worries. And if you look at such kind of deal, it is the only positive part what I can say is it's a French group has taken over the stake in GMR Infra. So for a longer term perspective, the company is getting a global exposure. It is not only in India, but it might be getting an international exposure. But right now it is wait and watch kind of situation to see how the new stakeholders are eventually managing the debt of the companies, and the company is trying to sell their stakes gradually and reducing the debt. So I don't find it's a new investment is advisable at this point in time. If you look at the book value, it is coming to around 19. And the current market price is running at around 26. So in terms of ratio, it is coming to 1.33. So I feel it seems to be an expensive compared to the peer group, or rather if you look at the price also, I think 19 will be considered to be a fair value price to buying this stock for the long-term perspective, not for the short term.
Okay, that's the view that's coming in. Aviation, at least airport operators not finding the favor, but what is finding favor with investors is probably the railway stocks, and one stock in particular which has done extremely well. It's up almost 6 times since the IPO issue price almost now at the 2000 level is IRCTC, and the rally again took off significantly post very strong set of numbers. At 2000, is there more steam left? Are valuations on the higher side, or still there is a chance of valuation expanding for the company? Obviously, Ritesh, you must be getting a lot of queries with IRCTC from your clients. So what have you told them? At earlier levels, I think it was cheap, you could have bought it. But now at 2000, what should one do?
See, at the price of 2000, we are definitely advising our customers to book profit for at this point in time. But definitely from a long-term perspective, whenever you are getting and buying opportunity at the deeper, it is always advisable for investing for a long term. If we look at overall performance of IRCTC, it is fantastic. The IPO price has come out at around 300, open prices running at around 600 something, then it went up to 900. Still, we are advising our customers to hold for a long-term perspective. Let us see the first quarter result also of the company after IPO, and the result was really fantastic in terms of the profit have been generated by the company. It is extraordinarily. If you look at the online booking, it was 39 crores business, which has went up to 198 crore business. So digital way online bookings are definitely is on the growing stage, and at the same time the facilities what the new private trains are providing, which is already disbursed almost 2 private trains, and it is expected another more 2 to 3 private trains to be start up. If you look at catering business, they have a monopoly on the catering business because it is privatized. Almost 70% they have a market share in the catering business, which almost consisting 40% of their total revenue. So in terms of long-term perspective, the facilities, amenities, and the government are supporting for a long-term horizon in terms of making Indian Railway to be more efficient way. I think it is a long-term point of view, it is a fantastic stock, but the way the price has increased in last 1 or 2 months in terms of returns, I think the profit booking is advisable at this point in time.
Okay, what's your sense on at 2000? To advise, firstly, someone who's bought IRCTC at lower levels, would you advise them to book profit or hold? Or someone who wants to take a fresh position, is this the right time to start buying?
See, if you're bought at lower levels, let us say even if you bought in January, I think January the stock was about 1000, so it's literally doubled from January. So even if you bought in January, I think you're sitting on a gold mine, and I wouldn't see any strong reason to really exit IRCTC at this point of time. Should you take a fresh investment perspective? I think I would agree with this view that short term it's a little difficult, but long term, yes, it looks very good. And I'll give you 2 reasons why I find this stock extremely interesting. See, the Indian Railways has always had a problem that how do I increase my charges? And it's very difficult to raise the charges of a price of a ticket. So now they're going to use the IRCTC as a method by which they're going to increase the charges, bill more charges on IRCTC. IRCTC will increase its rates. People don't realize it. They end up paying more on the internet. The IRCTC gets a better revenue model, Indian Railways gets its job done. So I think that is going to happen consistently over a period of time. Second point I was mentioning on your program a couple of weeks back is that they've got tremendous touch points. Now, I was giving an analogy between IRCTC and Flipkart. See, IRCTC has a market cap of about 4 billion. It's about 14% net profit margin. Flipkart was sold to Walmart at a valuation of 16.2 billion, and it has been making losses for as long as I can remember. Now, the question is, if you look at the number of customer touch points on a daily basis, IRCTC is far superior to Flipkart. So I think at some point, probably they need to sit down and think how they're going to monetize all these customer touch points. And I would believe sky is the limit. It may not happen tomorrow, it may not happen in the next 3 months. But I think if you take a next 4 or 5 year perspective, if the trajectory is managed well, I think sky is the limit for the stock.
Okay, that's the view that's coming in on IRCTC. The next one is probably a discussion, and we'll keep it open-ended. One mid-cap stock in which there is value. Some of the mid-cap stocks have corrected significantly. Obviously, the rally has started in some of them, but nowhere close to the highs that they were trading at. Hari, anything that you've told your clients in the mid-cap space to start accumulating?
We have been asking them to buy a lot of realty mid-caps, including Prestige is one. But if you ask me top of the chops, it's definitely going to be DLF. One time it was a large cap, but I think it's been a mid-cap for a long time. And we like DLF for 2 reasons. I think they originally planned to become zero debt by March 2020. That I think has got postponed to probably early part of 2021. But they are on target because they've been successfully monetizing their commercial real estate business time and again. So I think that should happen. Once that happens, the biggest overhang of DLF goes away. I think number 2, if you look at the DLF business model, they don't have much to worry about RERA because they don't sell unfinished apartments at all. All the apartments that they sell are finished apartments. So the whole RERA overhang that is in the real estate sector, I think that should be out. So, probably you may have some volatility in the short term, but if you take a 1.5 year perspective, I think DLF is a very, very good mid-cap to accumulate.
Okay, DLF is the stock that one should accumulate. Ritesh, which stock have you told your clients to start accumulating?
We are recommending into Manappuram Finance. No doubt in terms of sector-wise, it comes under the category of NBFC. But NBFC have been furthermore bifurcated in terms of affordable housing finance, commercial finance, and definitely in terms of non-gold finance and the gold finance itself. Manappuram Finance, if you look at the performance of the December quarter end, it is fantastic in terms of if you look at the profit margin, is almost increased by 68%. If you look at the performance of the stock, it is quarter on quarter basis growing by almost 20 to 25%. If you look at AUM, it is almost growing by 29.65%, which stood around 330 crore of net income. If you look at NBFC business, the net, apart from the net income, the major contribution is coming from the interest income, so which is almost growing by 21% on quarter basis. So if you look at NBFC sector, particularly on the Manappuram Finance, which is more about providing loan against the gold, and the gold price has also increasing, which is coming under has an AUM will be also increased by 26% on quarter basis and year on year basis. So I personally feel on a long term perspective, the company is having a very good structure model, and they have reported very good profit on quarter basis. So our advice is for Manappuram Finance for a long term perspective.
Okay, that's the view that's coming in on Manappuram Finance as in DLF, and final stock is Max Financial. On the day of the deal, it rallied 10%. Post the announcement of the deal, again rallied another 4%. So at levels of close to almost 600 right now. The pact with Axis Bank, now no doubt no clarity has come in whether the stake sale will come in Max Financial or whether it will come in, but the deal certainly seems to be with the subsidiary, which is Max Life. What should one do with Max Financial? What did you make of the deal? There's no clarity as such, but what should one do on Max Financial? Is it a better choice, or stick to the regular ones like ICICI Pru or SBI Life or an HDFC Life?
See, if you look at overall on insurance sector specific stock, then HDFC Life is our recommendation. If you look at Max Financial, the structure of the organization is all about insurance vertical in the business. Now, when it comes to Axis Bank is going to take over or buying some stake into the Max Financial, the intention of the Axis Bank is very clear. They wanted to create a financial hub wherein under one umbrella you will get all the financial product, and they wanted to grab the market share. So when it comes to a strategy for the management perspective, my recommendation is, instead of going to the Max Financial, better to go for buying an Axis Bank. If you look at HDFC, the HDFC has slowly and gradually bifurcated their wealth business separately, insurance business separately, and the banking channel separately. Recently we have heard about ICICI also in the same footpath to having a separate subsidiaries and having a different listing for all the subsidiaries. I think Axis is also wanted to do that, and it will be more benefited to the Max Financial as well, because Max Financial will get in benefit of the retail banking channel of the Axis Bank to do the cross-selling business. So I feel personally, in terms of PE, Max Financial is more expensive compared to the peer group. If you look at their PE is more than 100, I guess, and if you look at the industry PE, it is around 26. So in terms of industry PE, Max Financial is very much expensive. So I personally feel it has to be a very smart move, or strategy needs to be applied over here. Instead of getting into the Max Financial, some should go and buy for Axis Bank.
Okay, Axis Bank is a better bet to play Max Financial. What did you make of this deal that's come out, Hari?
See, firstly, I think the deal will happen between Axis Bank and Max Life Insurance, not Max Financial, because if you recollect, when the HDFC deal was being talked about, when the current Axis Bank CEO was actually driving the deal from HDFC Life, I think the reason it fell through with IRDA was that IRDA did not want a bank to acquire a holding company with an insurance company. That is where the whole problem arose. So I think it should eventually be a deal with Max Life. Now, having said that, I think to me it looks good for two reasons. Number one, if you recollect, Max has had one of the best agent management systems in the entire insurance space. So I think that is something that will now be it will be scaled up, because I think investors are realizing that if you talk of asset management or insurance today, it's only a bank assurance model that is running. So if you look at the top three insurers and the top three asset management companies, they are SBI, ICICI and HDFC. So clearly it's a bank assurance model that is running. I think from that perspective it makes sense for Max and for Axis. Secondly, if you look at the Max business today, about 40% anyway comes through Axis. So there's not going to be much of a difference in them holding on. So I think it makes sense for them to become gradually a part of Axis, and it also gives them a bigger balance sheet, because I think Axis is a much bigger balance sheet compared to Max. So they get a more stable balance sheet, and they get to now compete with the likes of ICICI Pru and HDFC. So I think it's a good move, and I would believe that should be positive for the stock.
Okay, that's the view that's coming in on Max Financial. Hari says it's positive for the stock. But with that, it's a wrap on today's edition of Hot Money. Hari and Ritesh, thank you so much for coming in today. Ask BQ comes up next. Stay tuned to Bloomberg.